Hello, Adam Zaghloul here, Vice President of Strategy and Planning at NTG Clarity. We just released an updated investor presentation, and the link to the document is in the description. But I'll use this video to go over some of the highlights, talking about who NTG is, what we do, and why we're a good investment. I want to take a second to look at our balance sheet. I get a lot of questions from investors about our balance sheet, so I thought I'd devote a whole slide to it. But the important thing to remember about NTG's liabilities is that they are 65% management owned. And a little bit of the backstory on this is prior to our offshore professional services model, we had incurred a lot of debt from bank creditors. And this was essentially called back in 2019. So the bank called the debt, but it was assigned to a numbered Ontario company, which was controlled by NTG's CEO and NTG's president. So this appears as $6.5 million of non-current liabilities. But in the contracts with that Ontario numbered company owned by NTG Management, there are no repayment terms, and the effective interest rate that's been charged is less than 1%. So the debt is extremely safe. The debt's extremely cheap. Also, as a result of that same restructuring, there are $2.8 million of current liabilities reflecting management dues due to that restructuring. So all in all, that's $9.3 million, or about 65% of the liabilities that are management owned, safe, and low cost. So taking a look at the graphs at the bottom of this page, the shareholder equity as it is on our balance sheet is negative $4.8 million, but taking into account this 6.5 plus $2.8 million of management owned liabilities, we start to see that because they're so safe, the shareholders' equity starts to appear positive when adjusting for this $4.5 million. And of course, we're going to use our continued profitability to pay off those debts on the books. But for now, I just wanted to give a sense of where the shareholders' equity would be without this really safe and really cheap debt. As another result from the operations that led up to the restructuring, there are $15 million of tax losses currently on the books for NTG. And it's possible they'll see this as an asset because they'll offset our future earnings. So a combination of basically tax credit on our future earnings, as well as the majority of our liabilities being management owned, really means that the company is in a much stronger position than a first glance of a balance sheet would tell you.